Good afternoon, ladies and gentlemen. Welcome to the Credit Summer Consumer Credit Debate. My name is Heather Gregg-Smith and I'm Head of Editorial for Credit Today and its sister publications. Today we have a panel of excellent speakers to debate the issues affecting the consumer credit sector as we apparently move from recession to recovery. The speakers encompass the breadth of the industry, from risk and regulation to debt collection, enforcement and debt advice. Now, when I chaired this debate 2 years ago, we were all still reeling from the near collapse of institutions many of us had assumed were rock solid. In the time since then, lenders have had to deal with serious financial pain, and individual consumers have faced their own challenges as they struggle to bring their debts under control in a contracting economy. The question for today is how far we've come into recovery and what challenges face the industry now. In a moment, I'm going to ask you to use your voting technology to tell us how optimistic you're feeling, and then at the end of the debate, we'll ask you the same question and see if there's been any change. So the question is, how optimistic do you feel about recovery? You press 1 for very optimistic, 2 for sort of optimistic, 3 for neither optimistic nor pessimistic, 4 for pessimistic, and 5 for very pessimistic. So if you all press now, I think there'll then be some funky music while it calibrates the decision. I think you get to vote if you want, but I don't know.
No, I don't think so. Because I want to say something that
Wasn't that
I want to say something optimistic but with a time lag.
Right. Oh, well that could be worse. Right, so most of you are, well, just under half are some sort of optimistic, and there's quite a lot of people sitting on the fence, so we'll see what happens in the rest of the debate in that case. Well, next I'd like to introduce our speakers to you. To my left is Joanna Elson. Joanna is Chief Executive of charity The Money Advice Trust. In the past, she worked as a researcher for a number of different MPs and ran the British Bankers Association's policy department relating to personal and small business customers. Involved in several financial inclusion charities and advising government on money advice issues, she was last year awarded an OBE for services to people in debt. To Joanna's left is David Fisher. David joined the Office of Fair Trading in 2001 from the Competition Commission, where he was an inquiry director. Before that, he worked for the New Zealand Competition Authority, and he's now director of the Consumer Credit Group and is also responsible for Consumer Direct, the government-funded advice service managed by the OFT. To his left, we have Ivan Lawrence. Ivan is Executive Director at Debt Purchaser Marlin, where he focuses on building relationships with lenders. He has over 27 years' experience in the financial services sector and was Business Development Director and a member of the Executive Committee of Barclaycard International before he joined Marlin. He has also worked for National Westminster Bank, HFC, Chartered Trust, MBNA and Bank One, as well as consulting with MasterCard advisors on the payments side. And then next we have Claire Sambrook. Claire is Solicitor and Chief Executive of one of the UK's largest High Court enforcement agencies, Sher Group. Sher Group specialises in commercial debt collection and enforcement of court judgments, as well as the eviction of squatters and property security. In the last 5 years alone, Sher Group has recovered more than £30 million of debt, and Claire is also a former chair of the High Court Enforcement Officers Association. She is Vice Chair of the Institute of Credit Management and a District Councillor in Braintree, Essex. And finally, at the end, we have Simon. Simon Baum is Director of Group Risk at Santander, and he was previously responsible for all credit and fraud risk issues within the retail banking arm of Alliance and Leicester. Prior to that, he was part of the credit risk team at PricewaterhouseCoopers and held a number of positions at Experian. Now, we were supposed to have MP Stella Creasy with us today, and she sends her apologies because she's been called to a parliamentary committee. However, we may still want to discuss the payday lending side of things if anyone has any questions on that. The general format, I have an initial question for each of the speakers, but I would like to open the debate to the floor as soon as possible and really give you a chance to ask the questions that you want to ask. So when we get to that stage, please don't be shy. But first of all, I'd like to start by asking Joanna how you feel consumers are coping with their debt problems and whether the pain is spread evenly across the UK or affecting some areas more than others.
Okay, thank you. Thank you for inviting me. It's a pleasure to be here. You gave us a hard act billing when you said we were a panel of excellent speakers, which I hope we live up to. I don't know when you're planning to vote on that. I hope not. Anyway, how are consumers consumers coping? Well, it's a mixed picture out there, isn't it? So what we're seeing in terms of demand for our services helping people in difficulty, we run National Debtline and Business Debtline, is that demand is high, but perhaps not as high as we might have expected. The issues that are in making demand high are as follows. I think some of you will have seen the CML's repossessions and arrears figures today. So repossessions up 15% in the first quarter compared to the first quarter in 2010. Clearly, families are feeling the pinch. There was some research from the Centre for Economic and Business Research a little while ago showing that the average family was £910 a year worse off. Now, average is, mask all kinds of things. I'm not sure how much that tells you, except that I think people are definitely feeling the pinch. And I don't want to be a doom merchant, but I do think that worse is to come. Heather did say I could vote, and I would have done, except I didn't quite. I would have said sort of optimistic, but with a time lag. And I'll explain that because I think the economy is going in the right direction. But what we know from previous recessions is that there is always a lag in terms of how that feels for real people. And this time we've got that in spades, haven't we? Because we know that what will affect how people cope with the economic climate are three things, really. And we have this from research we commissioned from the University of Nottingham. So the three things are obviously interest rates, the employment situation, and the cost of credit. Well, let's take the first two. On interest rates, we have had, haven't we, very low, record low interest rates for a very long period. We know from other research we've done that there is a population of people that is keeping its head above water, but that when interest rates rise, that a good proportion of those are going to struggle quite significantly. So that's one factor. Unemployment is clearly another. The unemployment hasn't increased in the way that some people thought it would, although I think the regional picture is quite interesting. So I'll move on to that now. So if you look at the UK across the board, you would be more optimistic, I think, than perhaps if you looked at the individual segments. We're just doing some work with Professor John Gathergood, breaking down some of that data into the 11 regions of the UK. And what we're seeing is a different picture in different areas. But if you look in particular at the areas where there are high levels of public sector employment, then you get quite a different picture to particularly the southeast, where there's much more private sector employment. It's much more likely, therefore, that the private sector can pick up job losses that are starting to come through from the public sector. And of course, regionally, you've got things like in Northern Ireland, there was a boom and bust associated with the housing boom and bust associated with the what happened in the south of Ireland. So that it's very mixed across the piece. I'll just finish with one thing which a senior government official told me recently, which was that her view was that we would see a further now north-south divide developing. So she was predicting, or her department was predicting, a bit of a mini housing boom in the south, and that coupled with the difficulties for employment in the north and other areas meant you would see a polarisation. So I don't know whether that's true, but I offer that as a possibility.
Thank you. That's fantastic. I'll move to David next then. David, obviously the backdrop to your role at the OFT is one of regulatory change, and presumably the OFT isn't going to exist in the same way it does at the moment. So I just wondered how this would affect your focus and your goals on the consumer credit side at the moment.
Okay. Well, I'll preface my comments by saying that I've been in this role for 1 month. That's not asking for your forbearance, but it might explain some of the answers that I give. This is a time of considerable change, uncertainty. The government is clearly determined to make a number of sweeping changes that will affect the competition regime in this country. It will affect the consumer regime as well. It'll certainly affect the Office of Fair Trading, and I imagine that it's highly likely that it'll only be a few more years from now that whoever's sitting here will certainly not be from the Office of Fair Trading, because it won't exist anymore. On the competition side, I mean, clearly the intention is to merge the Competition Commission and the Office of Fair Trading. More of interest to you, obviously, I think must be what the intentions are on the consumer side, and especially with consumer credit. And as you know, the government has recently completed its consultation. on the proposal that responsibility for regulation of consumer credit. I slightly hesitate over regulation of consumer credit because you may think that's an odd comment, but the OFT, we never think of ourselves as a regulator, but there we are, that's another point. But the proposal that responsibility for regulation of consumer credit should move across to the FCA when that's created, and indeed that the nature of the regulatory regime would change itself. We believe, we understand that we'll hear something from the government by way of its response to the consultation responses in the next couple of months. And at that point, we may have a clearer idea as to what the direction of travel will be. Shortly after I took up the job, about a week after I took up the job, I actually stood in front of the Consumer Credit Group, all 99 of them, at the Office of Fair Trading. And I looked at them and they looked at me, and they wanted to know, well, you know, what's your message as the new director? And my message to them is the message that I would give you today, which is that if I was giving you a speech, I would call it more of the same. And that's exactly the message I gave to them. It's exactly the message I gave to you. Even though there is still a fair amount of uncertainty as to the future of the consumer credit regime, if you look at the consultation document, and I'm sure all or most of you certainly did, and you looked at the timescale for change, we're looking at potentially 3 years away, possibly longer. And the message I gave to my team was, we can do a lot of righteous stuff in the next 3 years. We should not, to use a sporting message, we shouldn't be take our eye off the ball or however you want to describe it. We should stay very, very focused on the things that we do at the moment. So our actions over the next 3 years, which also happens to be the strategic period that the OFT looks forward over, is that we will be entirely consistent with two high overarching themes that the OFT has set for all its work. The first of those is what we call high impact enforcement. So enforcement will be very important for us, but high impact enforcement. We have limited resource. We are subject to budget cuts, as every other government department is, 25% over a 4-year period. So we need to make the best use of our resources. And when it comes to enforcement, it needs to be cases that will have the highest impact. And secondly, the second theme is influencing and changing behaviour. And I guess, as I thought about coming along today, what I might say, well, this actually is an example of influencing and hoping to change behaviour by giving you some insight into what we're doing. What that means in practice, I'll finish by saying that means, to me, it means a high degree of continuity in terms of what you will have seen from the OFT over the last couple of years, 2 to 3 years since we've had our enhanced powers. And I've got 4 points on that. First, we will continue to be an effective gatekeeper, by which I mean, of course, we are responsible for operating the licensing regime. So if you like, we are the gatekeeper. It's our responsibility to make sure that only fit people get in and can operate. So we will be an effective gatekeeper. We will continue to be an effective enforcer, and I think over the last couple of years, I hope that we've demonstrated that that's what we are. A third crucial role that we will continue with is talking to consumers, alerting to consumers to business practices that we think may have an adverse impact for them. And so you will have noticed, I guess, if you pay attention to the announcements that the OFT makes, if, for example, we talk about revoking a company's consumer credit license, we will explain why, what the circumstances are, why, and then we will give a message to consumers. You may have noticed only a few weeks ago we took down a number of websites, misleading websites. Some of them, incidentally, were up within 30 minutes of us taking them down, but there we are, that's another matter. But what we did is what we always do, is we take those opportunities to try and get the message out to consumers. It's not just a question of we've taken down a website, we've removed a license from a company, but why did we do it? What's the sort of the underlying